Really has been an interesting few months and quarters in the insurance space, particularly with the large losses suffered by the insurers, collectively reported being around $1 billion per annum. And that's forced the regulator to step in, try and help manage the situation better, which ultimately has resulted in insurers having to raise their premiums at a time where interest rates are at an all-time low, which hasn't helped the insurers with regard to profitability. Unfortunately, most insurers, if not all, have raised their rates, various percentages. We've seen a whole lot of different percentage rises from around 10% up to 87% in some instances. However, rest assured, when an increase does come through, we'll always look at the options for you, be it with the existing insurer or with another insurer, to make sure that you're taken care of. We'll always find a solution though. Moving forward, income protection is going to be available on indemnity style, which means you have to prove your financials the 12 months before there's a claim to ensure that you get your full payout when that occurs. Some of the insurers do offer 2 years or 3 years worth of flexibility in that regard. We've seen COVID-19 with a large impact in Australia, and some of the insurers' policies have actually had COVID exclusions or pandemic exclusions, which aren't really widely displayed. However, they are there in the policy. It's generally with super funds or larger super funds where that's been the case. Interestingly, also with total and permanent disability insurance via super fund, many of the funds have the ability to actually change the policy and the terms and conditions. It's not a guaranteed policy, as opposed to what an advisor will recommend, which be a retail policy, and those terms and conditions can't change, which is always going to be much better for you. We've noticed people working longer hours for various reasons. Income protection used to be available to age 65. Several insurers now have policies available to age 70, and they're getting ever more popular as people are working longer or have larger debts and a longer period in which to pay them down. If that's of interest, it is something that we should discuss, as it is available, especially whilst you're still healthy. Claim-wise, many more claims, unfortunately, than we've seen over the years. Where the claims coming from, we've seen a lot of claims for mental health, more recently musculoskeletal injuries, increased claims for cancers, males and females, as well as stroke and brain hemorrhages. In fact, quite a few for younger people who've all been healthy, and something that just happens out the blue. In terms of claims are so critical. It's not difficult to get a policy in place. The insurers that sometimes will advertise lower costs for policies. However, it's important not to be fooled by or attracted by a lower cost policy. When there's a claim, if it's handled by an insurance specialist who has a good understanding of how the policy works, they'll always help you through the actual claim from start to finish to make sure it's best managed. And if the insurers do have any grey areas which need to be addressed, the advisor will help you through the claim in order to make sure it's as seamless as possible. That's the updates for now. Look forward to giving you some more in the future.